Bitcoin is still in a consolidation phase. The gold chart is pumping, silver is pumping, everything is pumping in the end, and we're getting our little Xmas rally. And with that, Merry Christmas to everyone out there, a warm welcome and good morning to a new video. Bitcoin at 87,000 US dollars. We're going to do a quick update for today and probably also for tomorrow, because tomorrow I think I'll just take a day off to enjoy Christmas myself. And I think that nothing much is really going to happen anyway. So tomorrow and the day after, we'll just have to see. But today is another day with economic data coming out. We'll take a calm look at everything now. Before we get started, as always, feel free to give the video a like and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram talk and Signal group. There you'll always get the latest info, like when I enter any trades or if anything happens with my positions. You'll definitely hear about it there first. And if you're still looking for an exchange where you can trade all of this, you can do it all with my partner, exchange BingX. At the moment, you can secure up to 11,500 USDT in bonuses. And also, today the Xmas special is still running, where you can win prizes worth up to $6 million, or rather you can win them. And also in this solo competition, etc., you can participate, so feel free to check it out. The link is in the video description. Then I'd say let's jump right into the update. Yeah. Bitcoin is at just under 87,000 US dollars. The nice consolidation that we're seeing here again in a falling wedge chart pattern. I already mentioned it yesterday in the live stream, and honestly, what I would like to see now, if we go down to the 15-minute time frame, is for us to revisit this area here with the vectors we still have left around 86,000 to 86,200 US dollars. Down here is the liquidity, which would also fit with the falling wedge. We would then develop a bullish divergence, and from there we would start to move slowly into the area around 92,000 US dollars. Yesterday, I already opened a short-term long position, but by now that one has been stopped out again. Stopped out at the stop-loss entry, but I will try another new long. Nothing has changed with the short position. Yesterday, I took a small profit, also right here at this point from our entry at 92,000 US dollars. And if we come back into these price ranges in the next few hours, I will definitely place a long position here for the area around 92,000 US dollars. Why, for what reason, and how come? So why? Let's take a quick look at the heat map. By now, we have a very, very large cluster around 91,500 US dollars. That's the one I'd like to target. Also, as you know, in the area of 91,500 US dollars, we have our red vector right here in this zone. I'd like to target that as well. Or at least close it by 50%. That means the inefficiency would be closed exactly where, according to the heat map, most of the liquidity currently lies. We would have filled the vector, we would have filled the inefficiency. And from there, we could make a new turnaround to the downside. That would simply fit much better at the moment, because there's still significantly more liquidity accumulating down in the area around, this is new, $79,000, plus down here at $70,000. Or rather, we now have, once again, 3 fixed liquidity clusters. The first one would now be up here in the short term at 91.5. That would match up very well with the Christmas rally. The second is currently forming at 80,000 and the third at around 70,000 US dollars. As I said, if the markets were to open today, the initial and continuing jobless claims will be released at 2:30 p.m. That could lead to a bit more volatility. But all the stock exchanges are closed for the rest of the week. That means we'll probably take things a bit slower for now. Why is that? Then, to get to the point now, the funding rates are still relatively high. That's something I really don't like at the moment. That means I would go a little lower for a short while just to neutralize the funding rates again. Plus, what's positive in this case right now is the spot order book, the order book depth, and that looks very, very good. Actually, in the last few hours now, well, we've been seeing this for days. A massive accumulation, positive accumulation, while we're seeing falling prices. That's a good sign. But what bothers me, and that's also why the funding rates are so high, is ultimately the futures volume. Futures and spot are being bought. On the one hand, that's good, but the main move is still being driven by retail at the moment. And that's the big problem I still see in the market, which is why a small wick to the downside would fit very, very well. Then the liquidity above, and then we could fall significantly much lower in the coming days. Also, as I already mentioned, the traditional markets are completely at all-time high levels. Stocks rise to record, precious metals advance, so that means the precious metals are pumping even more anyway. India has announced that they are injecting fresh capital into the market, or rather into the banking sector, with government bonds. We haven't seen that yet in the US, at least not to that extent. So it will also be interesting to see how the US will slowly react to this soon. After Trump, yes, again last night, yes. How did he put it? He wants a Fed chief. Did I repost it? Yes, here. Breaking. President Trump says anyone who disagrees with him will never be the Fed chairman. And I've said it 100,000 times. I don't think it's good that the Fed is being undermined like this. He wants his clear favorite. Whether that's going to turn out well is a topic for the coming months, but somehow I doubt that this will end positively. But anyway, that's another topic. We'll take a closer look at it again in due time. In any case, there was also GDP data released yesterday, as it's written here, also 4.2, or up 4.3%. He could tell me whatever he wanted, but something is definitely not right there. But that also wiped out any chance of a Fed rate cut for now. All right, then let's move on to the altcoins. Ethereum, nothing to say. Ethereum, my short-term targets are $3,140 to about $3,200. And if this really turns into a wave 3, even 3,400 would be possible, but we'll have to take it day by day now. In the end, Bitcoin has pushed up by $4,000. Push! With the potential towards the vectors, the inefficiencies, so why shouldn't Ethereum also jump up by 10% for a short time? That would definitely be within the realm of possibility. Solana, nothing to do, it looks terrible. Let's move on to the traditional markets. Let's get started. Starting with the US dollar. The US dollar continues to fall. Not really a good sign, but the euro is rising, and that can usually only mean one thing. The US dollar is dropping against the yen, which means everyone here, those who took the trade again, please take profit up 1.1%. This thing is running very, very well. That means we've taken take profit 1 out of the zones here twice. Congratulations to everyone. But what I actually want to get at is, because the dollar is falling, it can only mean one thing, and that's the yen. And that brings us back to the topic I just mentioned, the yen carry trade. This topic shouldn't be underestimated, especially since I think there's another event tomorrow, if I remember correctly. Yes, right here. In Japan, the Bank of Japan has another meeting tomorrow. Governor Ueda will speak at 3 a.m. That could cause a bit of trouble. I'm telling you, the carry trade, I said it last week, I keep saying it, give it 5 to 7 days for the carry trade to unwind. And as things currently stand, we're also seeing this right now with Japanese bonds and Japanese stocks. Now there's this push happening with the yen getting stronger and the dollar falling. This is putting pressure on the carry trade, and that could lead to difficulties next week. Think about it, or at least keep it in the back of your mind, because Japanese bonds, they're not correcting yet. And they really should be correcting if interest rates are rising. It only makes sense, because in the end, yeah, okay, interest rates are going up, so we don't have to focus so much on safety anymore, but that's not what it looks like at the moment. And especially the 30-year bonds at 3.4 to just under 3.5%, that's not good. But all right, different topic. Just a word of caution. Just because the carry trade hasn't turned into that exact sell the news event doesn't mean it's not currently being unwound in the background, and that could still lead to bigger problems. DAX is stable, nothing much to say about it. Dow Jones, okay, it's been pushed up. NASDAQ is still at a very, very high level, but as you can see for yourselves, the volume is terrible. So we probably won't see real volume in the market again until after Christmas, maybe even after New Year's. What bothers me right now is that this whole phase that's being built up here might just be a fake move. At the moment, all of this is still being supported by the volatility index, which is absolutely down, but at a very, very low level. You can always see that whenever we were in this price range here, there was usually a bigger move upward afterwards. That's why you should be a bit cautious here. But it was clear that over Christmas, not much is going to happen now, but something could slowly start to build up. And the S&P 500, we see here that it's just about at a new all-time high, slowly approaching our short zone. Maybe we'll still get our short entry next week. That would be a cool New Year's trade. We'll have to see, but at the moment, it doesn't look too bad. So otherwise, yeah, there's not really much more to say. Just be careful. Gold is pumping. Oh, right, I haven't even shown gold yet. Gold has reached $4,500 by now. Just be extremely careful at the moment. I don't trust the market, as long as this whole carry trade situation hasn't unwound or been resolved yet. The risk is definitely still present in the market, also in stocks, due to low volume. Of course, it's difficult to pump the prices or do anything else. Just be careful. There's just too much negativity at the moment, and as we discussed yesterday in the live stream, if you were there, you can of course watch it afterwards as well. You can check it out again. But data like the ETFs, the long ETFs, the leveraged ETFs, they are 12.5 times larger than the short ETFs. That's not a good sign. Then Nvidia has so much in their warehouses, or rather in their inventory. how should I put it? Basically, so much inventory lying around, which strangely enough should have all been sold. Okay, multiple job holders. People need more jobs. That's not a good sign, but all right, we'll see what happens. Otherwise, I would say now, that's it from my side in any case. I would say I wish you all a wonderful Christmas. Enjoy the time with friends, family, and whoever else. Let yourselves be showered with gifts and everything else. Many, many thanks for your support, even today. And then I would say we'll probably hear from each other again, at the earliest on Friday, unless there's another update, but I don't know yet. Let's see how I feel or how you feel. And otherwise, yes, Merry Christmas. Enjoy the time, take a little break, put your phone away for a bit, or check the charts less often. And otherwise, that's it from my side. I wish you a very, very Merry Christmas, and we'll talk in the next few days. Until then, ciao, ciao, and as always, stay crypto.